right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin and the crypto markets. Welcome in, everybody. Happy Friday to you all. Bitcoin is starting to see a pretty aggressive dump to the downside, and guys, this could get pretty bad pretty quick here for Bitcoin. We knew that there were two major zones to reject if we were going to see some sort of corrective move, the 65K and that 66.8 to 67.3K area. And we are coming up to very, very key resistance, and we are rejecting from this resistance. And now it is starting to be dire now that we are confirming reacceptance back within our volume profile. So we'll get into this today, but welcome in, everybody. Samuel S. R. Pink, thank you so much for being here. Thank you for modding for me. Much love to you guys. Yeshwant, thank you for always tuning in from India. Much love to you. It's great to see you in here. Sierra Gurm, welcome in, and hello to you as well. Drop to 50K, please, and invested then. Yeah, Crypto OG Havoca, what we could see if this first move down starts with an impulse here, then we do have a pretty high likelihood of taking out 57.7. Now, we still do have a 56K support below us, that value area low of our 2.5-year long range. But this could get bad pretty quick. Below 49K, maybe. I mean, it's time. Yeah, 49K, I'm not going there quite yet, but let's see how we react. Also, guys, this range has been a pretty flat sideways range in here. In some ways, we could say this is a flat, but you did not take out your highs, which is concerning, but it happens a majority of the time, but not all the time. So if that's the case, we at least expect to take out our lows at 57.7, and we could still see some sort of accumulation occur in here if we do see sort of a Model 1 accumulation. And we did see something similar to that, actually. Let's go to the daily time frame. We did see something similar to that in reaccumulation within this 2024 range. You know, your tap 1, your tap 2, kind of your tap 3 in here, and then you had mini accumulation within that third tap in here, and then you get that expansion to the upside. So this was reaccumulation because it came off of a pump instead of a dump, but it's the same sort of concept, that Wyckoff accumulation. Down here, I mean, there is still the chance of making a higher low and then breaking this thing to the upside, but it would have been a much greater probability if we at least swept those 67.2K highs first. Because we didn't, there now is somewhat of a greater probability of making a Model 1 distribution where we make or Model 1 accumulation, excuse me, where we make another new low in here. And the bears, I would say the bears are in control right now, but it's not super dire yet for the bulls until they start to lose the point of control in our anchored VWAP. So let me go ahead and get into this here. Guys, we also talked about this liquidity sweep. We have a parabolic liquidity trail here that could get swept very, very quickly down into our golden pocket at $61,000. Let's see here. Dylan Wadia, welcome in. Ryan Hansen, welcome in. Renatholm 73. Can we visit the mid-70s first? I'm long, and then 40K. We still have a chance, Renatholm, to visit the mid-70s, but the fact that we close now, yesterday's daily candle close, this is important because I emphasized this in yesterday's live stream. I said, let's see if we can close our daily candle above or at the value area high. And if we can, there's a chance that we could see new highs being made. And you can see yesterday's daily candle closed pretty much right at the value area high. Now, unfortunately, right after that close, we continued up. We rejected from a very key local resistance. I'll show you guys that in a second. And now we're seeing a bearish candle continuing to the downside, continuing to hit that POC. So the fact that we've already dropped inside the volume profile and dropped to the POC is a sign of weakness for Bitcoin. It is a sign that we could be finding reacceptance back within the range of the past 6 weeks. And if we lose the POC, there is a very, very high probability of coming down to the value area low or near the value area low, sweeping the liquidity that has been created. And it's a very, very strong liquidity trail with a lot of higher lows in there. Could cause that kind of long squeeze liquidation cascade to come in. Crypto Wander 5813, thank you so much for being here. Thank you for modding for me. Yes, guys, please do hit the like button. If you do get any sort of insight into the market from this live stream, if you enjoy the TA at all, if you just enjoy hanging out with the Divine Hood crew, please hit the like button. Please subscribe to the channel, share the video. I just want to say I appreciate all of you so much. I appreciate my mods so much. And I think we have a really good community in here that has really good conversations. It's not all just one echo chamber mindset. And I love that about this channel. I love that about this community. So thank you guys. Wayne Rosi, welcome in. Good evening to you from Cape Town, man. Thank you for being here, Wayne Rosi, and I hope you're doing well. Crypto Creek 1557. Why are you so worried? This is perfectly retesting the POC. Crypto Creek, that's a good question. The reason why I'm worried is because, and I showed this in yesterday's video, anchored VWAPs are very, very important. An anchored VWAP is a volume-based trend support. So in an uptrend, when you hit an anchored VWAP and you bounce from an anchored VWAP, you generally see continuation of the trend to the upside. And in a downtrend, when you reject from an anchored VWAP, you generally see the trend continue to the downside. You can see our anchored VWAP from the all-time high at 98K. We reject, we see big continuation to the downside. Now we are taking an anchored VWAP from our last major weekly high at 82.8K, which we were looking for the rejection there. You could see that purple box. I was letting you guys know weeks ahead of time that I was looking for a major rejection between 82.3 and 82.5. We came a couple $100 higher, but we did see that major rejection. We did see new lows. Now, because that became such an important high here, the important anchored VWAP to break above for a bigger move to the upside is the anchored VWAP from 82.8K. We came up, we hit it perfectly hit that anchored VWAP, which was also a naked weekly point of control. It was also pretty much at the upper limit of your pitchfork band after bouncing from the bottom of the pitchfork band. And we are rejecting. Now, another reason why anchored VWAPs are so important is look at on the dump. We were dumping, continuing to dump aggressively, 1, 2, 3, 4, 5. It wasn't until we actually hit the anchored VWAP from the bear market lows that we got a $9,000 push to the upside. So anchored VWAPs are super, super important for high time frame trend continuation or trend reversal. The fact that we are hitting this, first of all, the fact that we broke out of the value area high just to reject from our major resistance above, and now that we're falling back inside the volume profile, is a serious valid concern. Yes, we are just backtesting the POC of the range, but now that we've actually hit the POC, so Crypto Creek, what we want to watch for now that we have hit in the POC, and we are seeing a little bit of a reaction from the POC, a little bit of a bounce from the POC, if we do come up and reject again on a higher time frame backtest of that value area high, you would expect continuation to the downside. And I would expect ferocious, quick continuation because of the liquidity trail that has been created in here, down to that golden pocket. Now, because we have such a strong liquidity trail into that golden pocket, I am expecting some sort of at least scalp long position or day trade long position from that golden pocket around 61K. But now in the next couple of days and over the weekend, especially knowing we're going into the weekend, if we see slow, grindy moves to the upside to backtest over the weekend, to backtest this value area low, and we start to reject, guys, we are going to see continuation down. High likelihood. I shouldn't guarantee that. I say high likelihood we should see continuation down. Yeah, and yes, Crypto Creek, to answer your other question, you want TA guys want it to retest the POC? Not necessarily. When you break out of a value area high, you can see how we had the immediate back test of the value area high. It held, so we made new local highs. After rejecting from a resistance, you want to see a higher time frame back test of that value area high, and you want it to hold so then you can make new like regional highs, right? And maybe see a breakout of the range. But the POC is, yes, it's your fair value, but the fact that look at how we dumped this morning back inside that volume profile. So that is very concerning because we saw a sell-off, and that's pretty much the market confirming reacceptance, a big volume-based dump to that POC. Yes, of course, you're going to see some sort of reaction at the POC, but this big volume imbalance candle inside the volume profile is accepting that the market is finding the fair value for Bitcoin still within this volume profile. Let's see, Crypto Wander 5813, what's up, Divine Simulus 44, our pink. Yeah, happy Friday to you, Crypto Wander. Much love, welcome in. Lil Rich 69, much love to you as well. Snood, thank you for being here, and much love to you. And of course, you're welcome for the TA. Absolutely. I'm glad you're here. Let's see. Eric. What's up, Eric? Team B Willa. Good to see you. Been a while. Just here to say hi. Thank you, Team B Willa. Maybe if you can't stick around, well, thank you for tuning in. Thank you for saying hi. Adam and Darkspeed19, Travi Trades, welcome in as well. So guys, 66,875, anchored VWAP, naked weekly point of control. Your pitchfork band was pretty much there. We had a bounce yesterday during the live stream directly from the bottom of the pitchfork band. And this bounce was important because first off, the move down here, we can count it a couple different ways, right? So we can count this as a wave one, wave two, wave one, wave two. This could have been a third wave to the downside, but we bounced. So 1, 2, bounce. And then we saw a corrective move up and there was overlap between the lows and the highs. So now if we're looking at a super bearish count, we have to count this as a multiple 1, 2. 1, 2, 1, 2, 1, 2. There's a major problem with that. Your primary 1 and 2 is your shortest. You can see your secondary 1, your secondary 2 is even longer than your primary, and then your trinary 1 and your trinary 2 are even longer. So it's like some sort of expanding diagonal in here with 1s and 2s building up, which is very, very rare. And then you would expect this third wave to continue dumping. You probably want it, maybe a 2 or 3 hours of a move here, and then you would want it to keep going. That is still a valid scenario. Now, on the other hand, as far as Elliott waves go, we could count this first move down, bouncing from the pitchfork band, as a contracting diagonal, where we have a 1, 2, 3, 4, 5 with your extended fifth wave in here. There is overlap between the lows of 2, the highs of 4. That's why if it's going to be classified as a motive wave, we have to say the only thing is a contracting diagonal. That wave 4 did not hit the top of the channel, so that is valid. Like if we turn on our parallel channel, actually, yeah, wave 4 in here. So you have a 1, 2, 3, 4, 5 in here. Actually, man, now that I'm looking at this, it's even hard. You might have to classify this as some sort of expanding diagonal, which is even more rare. So in some cases, that is good for the bulls, right? But there is a 5-wave count. Yes, there is overlap. There's a 5-wave count. And then afterwards, what happened from yesterday's low was super important. So I want to go in onto the 15-minute time frame. This move up yesterday, we had a move up, a correction towards your golden pocket, and then another move up. And if we look at, oops, let me get rid of that. Let me just zoom out to like the hourly chart because you can see this 3-wave corrective move a bit better. And if we pull our trend-based Fibonacci extinction from the lows from yesterday to those internal highs to those higher lows where we bounced from a golden pocket, where did we reject, guys? We rejected right between the 1.382 and the 1.236. You can see that's where that wick ended, at the 1.236. So we do have, that's your target. And yes, there was some wickage past it, but that's generally your target for the corrective move to end. And then you want to see new lows being made. The fact that we did see what looks like a 3-wave corrective move here, and we did take out our local lows, is now pretty much confirming that this was a corrective move to the upside. So if we're going to say now, also, what are your, in a corrective move, in a B wave or some sort of zigzag correction, you generally reject between the 0.5. So if I pull a Fibonacci from the highs of this potential motive wave down to the lows, and we turn on our 0.5, you can see ABC correction target. Look at that, guys. We rejected directly from that 0.5 Fibonacci, meaning that now we have even more proof that this was a corrective move before continuation of the overall trend, the overall local trend from that high. So now we can actually pull a trend-based Fibonacci extinction. We'll go from the highs of the motive wave to the lows of the motive wave to your corrective move highs. And look at what we have here. Our targets, so there's 2 scenarios here. The bulls still do have a chance. We could say that this is some sort of A wave in a contracting or expanding diagonal, a B wave to the 0.5, and then we would want to see a C wave that ends around that anchored VWAP. And guys, what have I been saying about anchored VWAPs? If we lose this anchored VWAP, it is highly, highly more probable that we drop to 61K and even probably to take out 57.7K eventually. So if the bulls are going to survive this, we really want to see either a bounce right now from our lows right now, or we want to see a bounce from around that 1-to-1 trend-based Fibonacci extinction, which is at your anchored VWAP. Now, in a bearish case scenario, we're looking for continuation down. So we can take our, we can take that trend-based Fibonacci extinction. We put the 1.618 on. 62K would be the end of the third wave. So we would be looking at this as some sort of 1, 2, and then the third wave would probably continue us down. And yes, you will see ebbs and flows within the third wave, right? You'll see a little sub count within that third wave, but we would come down, we would sweep some liquidity. And I talked about how we're going to see these bounces within these waves on liquidity sweeps, right? And we would probably see a 5-wave move down into 61K, ending your 5th wave at 61K. Now, after you end a larger impulse to the downside, this would be an impulse from the 66.8 to 61K lows. That would be an impulse. We would expect a bigger corrective move up towards the golden pocket, right? And so if we just pull a theoretical, this is completely theoretical right now, a theoretical golden pocket retracement from our highs, and I'm just going to put it right on our 61K lows, right pretty much on the SFP of those lows. And we turn on our golden pocket. You can see, where is the golden pocket coming in at? The back test of the value area high. And I would assume that this value area high might even shift down just a couple $100 to be in perfect alignment with this golden pocket. So after this dump to the downside, yes, we might get a nice trade from this general 61K support, but then I would have to have the bias that we are going to make a lower high, either at the POC or around the value area high, and then see continuation down, most likely to take out your 57.7K lows. Okay, let's zoom out a little bit further here. Let's go ahead and get all of this off the chart. One of the things that we were looking at was this sideways move from, what was that? In the beginning of June. The beginning of June here, first week of June, June 5th here, we had some lows at $59,000, or yeah, $59,000. And we were looking at that as actually those lows as part of an impulse. And if you guys remember, we do have a valid wave 1 here. I know this is a very small wave 2 in time and price, but we did reject from the 382 Fibonacci, which acts as strong resistance and strong support in a strong trend. Well, this has been a very strong trend. So we rejected in a wave 2. We saw our clear wave 3 here to 59K. We saw a nice corrective move up to 67.2. And then we had our last 5th and final wave to the downside. 1, 2, 3, 4, 5, having our last impulse. So all of this was part of an impulse to the downside. Our 57.7K lows were part of the impulse to the downside. So from those lows, now we have to look at certain corrective moves, right? So there's a couple things that we could look at from this low at 57.7. The main thing that we were looking at is either an A, B, C, where you then dump and just see continuation, harsh continuation to the downside, which we have hit the minimum target for that ABC correction. Let me just hide a couple things here to get this off of the chart. And if we take that trend-based Fibonacci extinction from the lows to our highs of the initial impulse to our lows. Now remember, this was a running flat correction, running flat sideways correction here. So that's why you want to take your third pivot and put it on this area here. And if we look at our ABC correction target, the main target is between the 1-to-1 and the 1.236, but your minimum target generally is the 0.618. Well, guys, we pretty much rejected in that zone between the 0.618 and your anchored VWAP. So there is a valid scenario that we do have an A running flat B and the C that is done. The problem with that is your C wave. Can we count a valid 1, 2? What you're going to say? That's your 3, that's your 4, and that's your 5. That's not right. It's more likely that we are seeing now. Also, this is very high probable in impulse in here. So you can't mix it within an A, B, C. It has to be impulse in A, impulse in C. If it's going to be a WXY, then you're looking for 3 wave moves in every single leg of the W. 3 wave move, 3 wave move, 3 wave move. So we can't even say that this is a WXY, right? We can't say this is a W because it's an impulse. Yes, we could say this running flat is a valid X, and then we could say this 3 wave corrective move is a Y, but we can't say that we have a valid W in here. So we can't call this a WXY. So from the 57.7K lows, as far as Elliott wave counts go, it is very hard to complete a finished corrective move. It's very hard to complete that. So what can we say? We can say, well, there's a couple of possibilities. We could be looking at a larger continuing range and then dumps to the downside, or we could be looking at, we would have to rework the way we counted kind of this structure in here and maybe say, you know, that this was a kind of a flat in here, and then you have your 1, 2, 3, 4, 5 contracting diagonal. So it's subjective with Elliott waves. That is a real valid scenario here where you impulse, you see your very quick running flat, and then this is the 1, 2, 3, 4, 5 contracting diagonal that pushes you up. You reject from resistance. If that is the case, and this is a done, then you do expect to take out the origins of that correction, which is our 57.7K lows. And generally, not generally, almost always, it's going to be an impulse, a larger impulsive move that brings you down to take out those lows, right? You will see strong bounces along the way, but you will see overall making lower lows, lower highs, lower lows, lower highs, lower lows until you take out that origin. Very concerning for the bulls here. Very, very concerning. Now, a couple things that I've discussed with you guys in depth heavily over the past couple of weeks is accumulation. Not only our larger weekly accumulation with our 60K lows in February being a tap 1, all of this range in here being a tap 2, and then maybe in October, November, seeing a tap 3 come in, preferably a higher low, right? But we really wanted to see this break up, or we wanted to see this take out 67.2, then see a retracement to that golden pocket, and that would give you the model 2 within the tap 2, the larger weekly tap 2. This would be like a daily accumulation within the weekly accumulation. And then at the end, you would hope to see this break up, you know, maybe make some new local highs or regional highs, and then this would come down to golden pocket in, you know, October, February, or October, November, December, and then that would give you your weekly accumulation. But now this theory of larger accumulation is still in play, but because we did not take out your swing highs of the range, we do have a greater probability now of making a model 1 distribution, which a model 2 distribution is like a inverse head and shoulders, right? You have your, first of all, in any kind of Wyckoff accumulation or distribution, and I think I keep saying distribution, I mean accumulation, guys. Accumulation is when you're accumulating at support and you push up. With any accumulation, you see a tap 1, which is a major low. Your tap 2, whether it's a model 1 or a model 2, is always lower than your tap 1, always lower, okay? And then in a model 2 accumulation, you have a tap 3 that is a higher low, and it's generally that inverse head and shoulders, which is a bottoming reversal pattern. So pattern traders didn't know the theory of Wyckoff's, but they understood the concept of market structure, things like that. They call it an inverse head and shoulders. It's pretty much a model 2 accumulation. Now, in model 1 accumulation, model 1 Wyckoff accumulation is you have your initial low. Your second low, remember, is always lower than your first low. And then your third, you generally make a lower high instead of making a higher high, which changes market structure if you make a higher high, which gives you a greater probability of making a higher low. That's the model 2. But in a model 1, you generally make a lower low, and then you continue the market structure down to, or you make a lower high, and then you continue the market structure down to make a lower low. And then you have 3 taps, but they're all lower than each other. And generally what it creates is that selling exhaustion channel. Selling exhaustion channel that you see. And then generally after making that third low, you generally tend to see the expansion phase come in, the breakout and the expansion phase come in. So now, because we are rejecting on a lower low, yes, it's only by $400 or so, but it is a lower low. We could see a move down, and look at our channel, guys, that we have. We have a channel, pretty much a guideline between our pitchfork bands, right? Our pitchfork band in the bottom of our pitchfork. So we could see over the next few weeks a drop, an impulse to the downside to come hit the bottom of the pitchfork again. Now let's go ahead and look at our volume profile. I'm going to zoom out to the daily time frame, And on the daily time frame, remember the way that market auction theory works. And I just want to clean this chart up just a second here, guys. The way that market auction theory works is when you see a range, that is considered a balance zone for Bitcoin. So in 2024, the fair value for Bitcoin was between $70,000, which was your value area high, and $60,000, which was your value area low, with your fair value, your balance zone, your fair value being around $63,000. And that was what the market priced in for Bitcoin. So anytime it came down to the 60s, we would see buys by institutions. Anytime it came up to the highs, we generally see sell-offs by the big players, right? Not by retail. Well, by retail too, but mainly orchestrated by the big players. After we had some, elections happen, some catalysts in the market and the geopolitical economy, we saw Bitcoin break out to new levels of price discovery. Now, after settling a bit, we started to form a new fair value in price discovery for Bitcoin. It was a historic event, right? Our first breakout above the psychological 100K level, and we started to form a new fair value. And this was the whole year of 2025. We found a new fair value in price discovery with it being overvalued around 116, or I believe it was 116. Hold on, let me just put that all-time high range on. It was 110. Our overvalued was 110. Our fair value was around 97,000, and our undervalued was around 86,000, 85, 86,000. After some geopolitical events, war, things like that happened, we saw a breakdown, an aggressive breakdown. The market was no longer pricing in the fair value for Bitcoin in the levels of balance of 2025, the price discovery balance zone of 2025. And we broke down back into your fair value in your balance for 2024. Now, why did we bounce at 60K in February, guys? Very, very simple. We bounced at 60K because it was your previous range value area low. To the exact dollar, we bounced from your value area low in 2024. If you pull that volume profile and you look at that range, your value area low was there in 2024. You bounced from your value area low. So the market was saying, we no longer accept the fair value of Bitcoin to be up in this upper level of price discovery, but we are willing to buy it when it's considered undervalued for 2024 price targets. So it was bought, strong recovery. And remember, we were messing around with the value area high. We were stuck inside this volume profile for weeks. We were stuck inside and we kept, oops, let me just do this. Let's do this. We kept rejecting, came up, we saw one rejection, a higher low, another rejection, higher low, another rejection, higher low, another rejection, higher low. And then we finally tried to break out, but we fell back inside, tried to break out. And we just chopped around pretty much within 2024's fair value for a couple months, like a month and a half. After finally changing some market structure, right, we broke up, and this was a very important value area low of this range. It was also a golden pocket of this range. We broke up, and we finally were saying, okay, the market is now saying that, you know what, maybe 2024's fair value is a little bit undersold. Let's go see if we can test the fair value for 2025. And the zone that you retest as a market on macro timeframes, the zone that the market retests to see if it wants to break back up into the balance zone of 2025 is between the lows of the range and the value area low of the range. So between the lows of $80,000 and the value area low of $86,000. And if you do reject within that zone, it's a zone, right? If you reject within that zone, which you can see we did, and the reason why we rejected where we did is because we had macro resistance there. If we reject within that zone, then you do expect to dump to take out your lows, your last macro lows. And that's exactly what happened, guys. So this is market auction theory. This is the way the market works, finding balance zones for Bitcoin. But now that we have kind of found reacceptance back within 2024, is now that we've had months of trading in between the zone of 2025 and 2024, we can now take the two ranges and we can combine them together to make one bigger range, because the market is in the process of figuring out whether it wants to balance in between 2024 or 2025. So that is when you can take that volume profile, you combine the two ranges, and then you get that kind of the whole psychology of trying to find the fair value of Bitcoin over the past couple of years. The value area low, $56,000, guys, pretty much at $56,000, $55,975, right? So If we do now reject, it will take some time for us to get down there, right? A wave 1, a wave 2, maybe a wave 3, sweeps 57K, 4, 5. And we come down and we hit the bottom of the pitchfork again inside that value area low, hitting and bouncing from the value area low. That could still give us our Model 1 accumulation within this zone. Going back to June, the middle of June, a little bit, maybe a 3-month mini accumulation, a Model 1 accumulation, where then we would hope as bulls that this can break out, flip it, and then continue up. And we would want to see it probably continue at least to hit this pitchfork midline of the bearish pitchfork. That would be your expansion phase of a Model 1. Now, after seeing that, technically on the higher time frames, you're still making lower highs, right? You're still in the bigger channel, descending channel, making lower highs over 82.8. We could see a retracement in either a Model 2 where we come down towards golden pocket. You see a tap 1. All of this is considered a tap 2. This would be considered a tap 3. And then you could hopefully see a new bull market come in. Or you see another Model 1 where you come down again and you see the bigger channel Model 1 accumulation, right? And then in a very bearish scenario, we just see a failed accumulation and it becomes redistribution and we really see a breakdown. I'm not going to get into that until we start seeing more signs of that on the charts. But this is kind of what I'm paying attention to overall as far as the technicals on the chart. Now, we are still managing within this range. And remember, trade the range until it breaks. Pay attention to the most local recent price action in front of you with the bias of the larger context. The bias of the larger context is we're in a bear market. We've been in a downtrend. We're 50% off all-time highs, but we are coming into some very, very crucial supports as far as Bitcoin, crucial macro technical support levels. If we lose these macro, I would say $57,000 to $56,000, we could see a dump down into the 40s, right? Let me go to the Binance chart. If we lose, first of all, multiple high time frame pitchfork support levels at this high to mid 50s, but if we dump down, we could see a move down into like 41 to 39K or 42 to 39K, which is our next major support level. On Binance, our anchored VWAP from the bear market low is a lot lower. Now, every other exchange, it's up in the mid 50s, or even on Bybit, it's above us, right? On Bybit, it's above us. But if we look at primarily the main charts I like to look at are the index chart and the Coinbase chart. Coinbase chart, you can see our anchored VWAP was tapped pretty much to the dollar. We got that strong $9,000 bounce from it. And if we look at the index chart, on the index chart, same kind of area. Bounce, got that nice move from it. So, I am paying attention mostly to the anchored VWAP on Coinbase and on the index chart. But the Binance anchored VWAP from the bear market lows is all the way down at, what is that, $42,500. All right, let me jump into the chat here, guys. Thank you so much for being here. Welcome in, everybody. This is a little bit dire for Bitcoin. In bear markets, you generally see this kind of overall 3-wave corrective move, and followed by a harsh dump, another 3-wave corrective move, followed by a harsh dump. But sometimes in really bearish markets, you just get what's called a flat, like a flat in here, where it's a sideways range, a flat, and then you dump. So this is a real possibility that we need to watch out for. On the weekly time frame, we still do have bull divs, and this is keeping me somewhat bullish. On the weekly time frame, you can see we have confirmed bull divs on Market Cypher, but we do not have them on NAMI. And what I would like to see, in order for a true bear market bottom, I would want to see both NAMI and Market Cypher having bull divs on the weekly time frame. Another thing to look at this pitchfork here, guys. We have multiple high time frame pitchforks, support levels here. This is our entire multi-cycle pitchfork. The entire bull market has been highly respected inside this pitchfork. We're for the first time bouncing from the bottom. We wicked past it on the weekly time frame, but no daily candle closes on the weekly. If we lose this pitchfork, you could see mass continuation to the downside, right? With some liquidity grabs probably at 49K. We'll probably see a nice bounce. What would happen probably is we would flush down, grab the liquidity from 49, and then we would probably see a move up for a few weeks to back test that pitchfork. And if we reject, that's when you see the move down to 41K. Now, This is a bullish pitchfork, a multi-cycle bullish pitchfork, high time frame. Let's go to the Coinbase chart. This is our bearish pitchfork for this bear cycle. Highly, highly respected, right? Highly respected pitchfork in this cycle. We're at the bottom of the bearish pitchfork. If you break down a bearish pitchfork, man, you generally see pretty harsh continuation to the downside. Let's look at our bullish pitchfork that is another instance of a bullish pitchfork, not the multi-cycle one. It's from your, well, it's a multi-cycle one as well. It's from your last bull market / bear market. Let me just turn it on instead of yapping about it. Sorry, that's not it. There we go. So this is from your last bear market and bear cycle. And what I'll do is I'll turn off our smaller bearish pitchfork from this bear market so you can see that, hey, what happened in this cycle? Let me just hide this. You can see rejection in 2024 from the upper band, rejection, rejection. You come down, you hold a higher low, you bounce pretty much from your previous range highs. And that's that theory, market auction theory. Remember, when you have a range and you break out of a range, if you start to lose the value area low, you generally will test the highs of that previous range or the value area high of that previous range. Well, in this case, we bounced from the highs of our previous range here. That's why we bounced at 49K. But came to the top, rejection. You had a distribution right up here, rejection, bounce from the band, reject from the anchored VWAP, lose it, reject from the anchored VWAP. We come down to the midline. We're at the midline right now. So right now you have three high time frame pitchforks I showed you, 2 bullish ones and this one bearish one, all major pitchfork support. Okay. And then we even have another high time frame pitchfork that is at this level. So if we lose this level with high time frame pitchforks, high time frame anchored VWAP, that is when you could see aggressive moves to the downside on the weekly time frame. So I'm not saying like in 1 or 2 days you're going to flush aggressively. I'm going to say like within a couple months you would expect to flush aggressively within a couple months down, potentially even down to 34K, 32K. All right, let me check the chat here, guys. Welcome in everybody. Crypto Creek, we will check near. I know that near finally took out that 184 low. It happened last night while I was sleeping. But we'll check it out. Shogun Crypto, welcome in. Dylan, thank you so much for the comment. Learning so much every time I tune in. Well, thank you, Dylan. I appreciate the comment, man, and the kind words. Please do smash the like button, guys. If you do get any sort of learning or insight into the market, please do smash the like button for me. LCSPZ Photography, can we continue the dump from here? Yes, we can, but lower time frames. So let me get back to Coinbase. Lower time frames were probably because we saw a bounce from our POC. We're seeing a bounce from our current POC right now. So we're either going to reject from our VWAP above us, or we're going to reject from the value area high. Now, this is where I do want to get into the lower time frame stuff here, guys, because and let me just hide some of these that I've put on the chart, or get rid of some of these ones here. There we go. Get rid of that. We'll pull this one over. All right. So you can see we're back inside of our value area low, or value area high. We're back inside the volume profile. We're bouncing from the POC area. Now, if we do come up, let's take a golden pocket from our rejection high yesterday to our low today. We're going to take the golden pocket. You can see our golden pocket is right on top of that value area high. So just like I said with volume profile trading, when you find reacceptance back inside the volume profile, we tried to break out. The bulls had their chance. They needed an impulse here, not a corrective move, but they got the corrective move. The bears are still in control, and the bears dumped us aggressively with volume back inside the volume profile. Now, what you generally see is the first time you come down to your point of control, you'll see some sort of reaction. You'll see some sort of bounce. Now, that bounce can be a very small bounce just to test your intraday trend, which is a VWAP, right? It's an intraday trend-based volume support or resistance. You'll either reject from the VWAP and continue down, or you can see what we don't want to see here is something like this, and reject from a lower high, a 3-wave corrective move up, and reject on another bearish backtest of that value area high, which happens to be our local golden pocket too. So right around 65K, guys. If we reject right around 65K, that is when we could see the quick flush down to 61K. And so we could see a small bounce from here. It depends, right? If we bounce from here and we do something like this, where we come all the way up here, see a 1, and then we flip that VWAP to support and then break out, that would be very bullish, because we're going to sweep 1, 2, 3, 4, 5 lower highs. You're going to see a short squeeze to the upside, squeezing all that, probably squeezing it all, and then seeing us ultimately take out the highs at 67,250. But the move up that we see over the weekend is going to be very, very important. If we do reject again, guys, from 65K, then it is very high probability we come down to 61K. Not right away. It's not going to be a straight move down, right? You will see ebbs and flows. Like I said, every single liquidity grab we have, we're probably going to get at least a scalp reaction, a scalp long reaction off of it. Maybe these two will be taken together because they're so close to each other, right? These two here. But I would suspect that we would see continuation down, maybe come down SFP, maybe move up, maybe even move up to backtest the anchored VWAP, come down SFP, both of those. Actually, you're probably going to SFP both those together, right? You might see an SFP here ahead of time. So, you get your move up, come down, SFP this, maybe backtest anchor VWAP, come down, SFP that, and then you get the kind of push up here. We will see ebbs and flows where we can take scalp longs, but if you take longs on these SFPs, you better take the long with the psychology of taking profit, locking in profit quickly, moving your stop loss to break even quickly, because the downtrend is likely to continue. Let's see. Snood, you're short at 66.8, but I closed the position at the POC. I didn't leave a runner. Well, that's still a good. Hey, don't be mad at yourself for having an excellent trade. Look at you shorted the absolute top. As of now, you closed pretty much near the lows of the move. So good on you, man. That's a great trade, in my opinion. That is a really good trade. And don't beat yourself up for taking profits. Now, yes, me personally, I would have left a little bit of a runner, even if it was 10% of the position. I would have left a little bit of a runner, especially now with the bias changing, because we're falling back inside the volume profile. Now the bias is changing to maybe a move down to 61K or even 60K. But good on you. You can't go broke taking profits, man. So, and yeah, just like our Pink said, profits are good. If that was your plan, good to stick into it. I would say excellent trade there, man. Excellent application of that trade, and just doing it properly, right? Can anyone recap? Are we a bearish bias? Ness, yes, Ness, to answer your question, my bias is starting to shift now to a little bit of a bearish bias. And the reason why is because we're finding reacceptance back within our volume profile. If you look here, once we finally fell back inside the volume profile, we got that big imbalance candle to drop us to the POC. So that is the market selling off and saying, you know what, pretty much that's the market saying, yeah, we're still finding the fair value within this zone between 65 and 61K or 60K. Alex, thank you. Made it for the goods. Great TA Divine. I agree with everything you said so far. Things are getting interesting. I'm 75% out of my 57,800 long, and I have 100% left in my 66,750 short. Dang, Alex, you are killing it, man. That is great. Alex, you long the absolute bottom. You're 75% out of that, and you're shorted the absolute top, and you're still in that. And I would say you are destroying the market. You're dominating the markets right now. You're doing really good swing trades. So you should be really proud and happy with that. And a lot of time people will try to overtrade and get every single pivot, and they end up losing more profit than if they take one or two trades and they let those trades run and they have good proper confirmation. So I'd say, Alex, you're doing a really good job there. Great analysis. Great. Wow, God, what's the word I'm looking for? When you actually stick to your plan. Good job doing what you're doing. Let's just say that. For some word, that word is eluding me, you guys. Kodak, welcome in. Hey, Divine, my man. We go lower, boys, much lower. U.S. 10-year bond yield broke out 4.7% and higher. So BTC inverse 70% equals much, much lower. Yeah, that's Kodak. That's what it is looking like now. Also, I know that the Crypto Clarity Act is in jeopardy of kind of failing again. And if we do see that, headline, Crypto Clarity Act fails to pass Congress or whatever like that, it's going to also be a bearish catalyst to push us down. Patrick Schooner, welcome in, my friend. Hello to you. Let's see. Say got an SFP. We'll go into some of the altcoins in just a second, guys. All right. Near sitting on 786 long. We'll check Near. We'll check Say in just a second. Thanks for the well-explained macro view. Going into the weekend, what are you expecting, and what are the what would be valid levels for either short position or long positions? Yeah, thank you, first of all, Wayne Rossi, for that. So what I'm looking at now for a potential short position is 65K, right? Because if we come up and we reject from the value area high in our local golden pocket, I would take a short from there. Now, you could do this short one of two ways. You could short 65K. Now, first off, by the way, Wayne Rossi, we want to see kind of a grindy, slow, low volume move. So you can come in here, you can turn on your volume, and as the weekend's going, as you're making that move up, you want to see volume getting lower and lower and lower as we're coming into that golden pocket at 65K. But, and you generally want to see it be some sort of zigzag correction or flat correction or something like that. But what we want to see is you could take this short two ways. You could short the rejection of 65. Now, the proper technical level for the stop loss would be the stop above yesterday's lower high pivot. What I would be targeting with this short position is I would be targeting the SFP into the golden pocket. So that's already a 5-to-1 risk to reward ratio. That, to me, is an acceptable short to take. Now, if you wanted to be even more aggressive with the short, and it's technically not the technical like the proper stop loss on this, but I do this sometimes in my trading, and you would have to probably be at the chart. What we can do right now is I'll set an alert at our 0.618, and if that hits over the weekend, I'll try to let you guys know in the Telegram whether I'm taking that short or not. But if we come up and reject from that golden pocket, what you can do, what you can wait for is you can wait for that corrective move coming up here. As you're rejecting, as soon as you start to lose the 618, maybe $100 or $200 below, you can short right here. You can put your stop above that local high, and then you could target the 61K area. Now, all of a sudden, because your stop loss is so much tighter, you're ultimately still looking for a move down to 61K. But look at, instead of a 5-to-1, you have a 13-to-1 risk to reward ratio. But this trade is much, much more risky to take, because you could see a fake out here, right? You could see something like this, and then some sort of double top or some sort of low time frame head and shoulders here, where you're going to get stopped out, and then the move's going to happen anyway. But what the best trade to take, the most technically sound trade to take, would be that initial trade that I just showed you, where if we're coming up to 65K, you short at 65K, your stop goes above the high from yesterday at 65,750, and you're targeting overall 61K. Which you can take some profits on some of these liquidity grabs. Maybe take 25% profit out on this liquidity grab or this liquidity grab. But ultimately, I would be expecting that move down to 61K. So this is the most technical sound short trade you could take. But if you want to get that better risk to reward ratio so that you can get a better, a better stop loss, a better short in there, then you would look for something like this, the lower time frame one. I hope that makes sense, guys. As far as long positions go, man, all right. Long positions, anchored VWAP. You can see our anchored VWAP holds new local highs. Chop around it, it holds, but that was a very low time frame accumulation, by the way, guys. If you want to see accumulation, tap 1, tap 2, tap 3, expansion, right? So yes, there was some wickage in and around it, but it held. You made new local highs. Actually, this on Coinbase was a new local high. On some exchanges, it wasn't, but it was continuation pretty much. You come down, you see something very similar, a little bit of a failed auction below it, but new local highs after it bounces. You hold it again. What do you see? New local highs again. So the anchored VWAP from the lows, take an anchored VWAP, take your anchored VWAP tool, put it on that 57.7K low, and use that anchored VWAP, okay? You can all throw that on your charts. That anchored VWAP is coming in around 63.4K. That is still going to be an important support level. What we could be looking at here, if the POC overall is going to hold, let's say this POC region, it's a zone. Remember, it's a zone, POC anchored VWAP, right? We could see something like we saw here, where you get a bounce from the POC, you make a move up to VWAP, then you drop to the anchored VWAP, and then you see that something like that. So what we could be looking at is something like, let me just grab our bars pattern. We could be looking at something like this, right? Where you bounce from the POC, you get a move up to VWAP, you reject from VWAP, you get a move down to your anchored VWAP, you bounce from your anchored VWAP, then you kind of flip that POC to support, and then you start to work up. So POC, the anchored VWAP would be a level where I would potentially take a scalp. It would first be with the mindset of a scalp long, right? Especially if we don't come up to value area high first. If we do something like this first, I would potentially take a long from the anchored VWAP, but I would look to take profit, at least 50% profit at 65K, because you could do something like that, right? And what I would want to see for this trade to play out is I would want to see bull divs on like probably the 1 hour, probably the 4 hour and under. Maybe not every single time frame, but you would want to see bull divs between yesterday's low and the lows that are made into that anchored VWAP. You'd want to see some bull divs. So right now, Market Cipher is not confirming that, and money flows in the red. It doesn't look good as far as Market Cipher goes, but NAMI is quicker. You are seeing potential bull divs, and you would want to see this money flow curving and rounding to the upside as you're hitting the anchored VWAP. So we see potential 4 hour bull divs on NAMI. Let's go to the 2 hour. On the 2 hour chart, yes, look at, we're seeing already bull divs. Lower lows in the price action, higher lows in the momentum waves. Now you would really want to see that money flow starting to curve up, and it looks like maybe it is. You're maybe seeing even some money flow bull divs in here, right? And then are we seeing bull divs on NAMI? Yes, you are. You know, so even if we make another local drop and come to that anchor VWAP and do something like that, it's giving us already enough confirmation. 2 hour, both in the Market Cipher and NAMI have bull divs, and the 4 hour, NAMI has the bull divs. Let's go to the 1 hour. Do we have it on the 1 hour? 1 hour, bull divs confirmed, right? Between yesterday's low and today's low, bull divs confirmed. Money flow rounding out, starting to curve to the upside. Okay, do we see it on NAMI? Well, we see very, very local bull divs in this here, but we don't see the regional bull divs that NAMI does. But what do we see here? We see money flow bull divs in here. So yeah, we have some decent confirmation to look for a long, a scalp long. In my personal bias, it would be a scalp long up to 65K, where you could either take out 75% or 50% at that 65K, because there is a strong chance of rejection there. Okay, so that is that. Even 15-minute, let's go to the 15-minute. Do we see any 15-minute bull divs in here? Yeah, I mean, you see, look at this nice little kind of curvature up here on the 15-minute. You see kind of this nice curvature up, money flow crossing here. On NAMI or on Market Cipher, you don't see it, but if you got another quick move down, you would see some bull divs there. Okay. Thank you, Mr. Rekachun. Much love to you, man. Good to see you in here as always. And I appreciate you, Mr. Rekachun. The one, the only, the divine one. Guys, no, you know, divinehood for me, I do think, I wouldn't say I'm super religious, but I would say I'm spiritual. I believe in a divine source, God, whatever you want to call it. And I do believe that we have souls and everything like that. So divinehood came from like a brotherhood of people that are all created from the divine, and, you know, boys and girls, a brotherhood of the men and women here. And I believe in service to others, right? I think the Bible talks about that. Many cultures talk about it. If you're going to be truly service to others, you will live your most gratified life out there. We'll look at Hyperliquid as well, Anthony. Loki spin, parallel channel midline, also with golden pocket at 65K. Okay, yeah, are you talking about that smaller parallel channel? Let's look at that smaller parallel channel. Yeah, it's actually, depending on how fast we get up there, it's actually going to be towards the top of that parallel channel. Now, my parallel channel might be a little bit different from yours. This parallel channel I pulled a couple days ago. It's from this high to this high to this low in here. So if we pull a variation of the parallel channel, and also look at, guys, on Tuesday's or on Monday's video, We were right in here and we were about to break out, or that was Wednesday's video, excuse me. On Wednesday's video, we were right here about to break out, and I said, hold your horses. We want to see an hourly close. If we don't see an hourly close, we're going to drop to 65K. That's what happened. Well, what happened? After seeing you break back in the channel, you back test the channel. Because you held the channel, you come to the top of the channel. We saw another attempted breakout of the channel, another hourly close, not back inside, not a breakout, right? Another fake out on the hourly time frame. You break down again. So this channel is being highly respected, even though there's a little bit of chop below it here. It's being highly, highly respected. But we can take a variation of this channel. We can update it. We can pull from our highs, and I'm going to bring it to that high right up there, and we'll bring it down to that first major low, or the third, like the low that was there. And yeah, you're depending on how quick you move up there, it's going to be around your midline. I think that's the channel you're looking at. You could also pull it to this one here, and I think if you're doing something like this, but yeah, I get your point there. We do have some resistance there. Oh, thank you, R-Pink. Okay, guys, really quickly, I do want to take a second to shout out the partners of the channel. So the main partner of the channel is BYDFI. They're a VPN and KYC free exchange. All you need is an email and a password to sign up. If you do sign up using my affiliate link in the description below, you can get a minimum of 20% discounts on your trading fees, and you can earn up to 40% discounts on trading fees if you do deposit some larger amounts into the exchange. They're offering up to $8,100 in futures trading bonuses on the USDT futures market. So that's not only Bitcoin, but that's all the altcoins as well. Just by trading on the exchange, you can earn extra money. And in my opinion, if you're already trading USDT contracts, it's a great incentive to earn that extra money. They're also offering some of the best initial deposit bonuses in the entire industry. If you deposit $100, you get a 50% bonus, which is over double what most exchanges will give you on a $100 deposit. They're giving you 20% deposit bonuses up to a $1,000 deposit, and they're giving you 10% deposit bonuses up to a $20,000 deposit. I've also partnered with BYDFI to create that Telegram community. It's a private community, but it's free. All you guys need to do to get into the community is join BYDFI using my affiliate link in the description and deposit a minimum amount of $100 or more. You can deposit more if you want to get some of the bigger bonuses, some of the bigger rewards, but a minimum deposit of $100. Once you've done that, you click the Telegram link in the description of this video, or R-Pink did post it in the chat as well. And in that Telegram verify channel, you're going to type in /verify and then your user ID. It's probably going to be a string of letters and numbers for you guys, but /verify and your user ID, and it will get you into the Telegram. Now, the money you deposit in the Telegram is your money, guys. You're not paying it to me. You're not paying it to BYDFI. It's your money. You're depositing it on the exchange in hopes that you will try it out, like it, and stick with it. I am a few other exchange partners. One more non-KYC. It's Blowfin. I have MEXC and Bybit as KYC exchange partners. All of them are offering certain benefits, initial deposit bonuses and discounts if you sign up using my link. They are a way to support the channel, to say thank you. So those are in the description if you'd like. And then lastly, I have Nami Trading. Now, Wayne Rossi, I did talk to False Prophet about that discount code. So guys, first off, Nami is a momentum and money flow indicator I use for confirmations to enter and exit trades. As we're coming up to resistances, I want to see bear divs on the chart, right? If I see confirmations, I'm much more likely to take the short. I'm not just taking a trade because it's resistance. I want to see confirmation. I'm a confirmation-based trader. Since I've been using Nami for confirmations, my profit margins have gone up. And in my opinion, it's a proper tool to do the job properly, right? So I've partnered with Nami to get you guys, running till tomorrow, we have a 60% off coupon. So if you use Pump Divine, discount code Pump Divine, you can get 60% off, but that's only till tomorrow at midnight, on Friday at midnight. Now, Wayne Rossi, you asked me yesterday about, is that only for lifetime, the subscription, lifetime subscription, the 50% off or 60% off, it's only for lifetime. But I did talk to him about getting you guys use discount code Divine50 on the monthly subscription. You guys can get 25% off. So I think it's Divine50 still is the discount code. If not, I'll get that for you guys. But you do have a 25% discount code for if you want to try the monthly subscription. Maybe just try it for 1 or 2 months. But False Prophet also did tell me that with the 60% off discount code, he said that the 60% discount code brings it really close to the other prices. Definitely a better deal if you're trying to save money. That's his direct words there, okay? And yeah, the original code is for lifetime, but 25 one is for the other two products. Okay, cool. So I'll make sure I get that for you guys. Let me actually text him right now. Sorry, guys. All right, I just sent him that message, so hopefully he gets back to me during this stream. But yeah, it's there available if you guys want it. Adam, thank you so much for the comment. I appreciate you being here as much as you appreciate my insight, man. So thank you. Yeah. Oh, cool, Travie Trades. Yeah, man. It's definitely, there's definitely some thought behind the name. I really like it. All right, we can go into some of the altcoins. So let me scroll up in the chat. We were going to go through Near first. Now, guys, I will go pretty quick through these because I do want to see what Bitcoin's doing. But if Bitcoin's just low volume chop, we can continue to go through some of these altcoins in here. But pretty much yesterday we covered Near, and I was focusing. We were focusing on pretty much this sideways range in here for the past few weeks, and I let you guys know we have triple tops up here, semi-equal triple tops up here around 211. And we have the semi-equal lows all in here, right? Yesterday, we SFP'd the internal lows. Let me get that. We SFP'd the internal lows. It was a double bottom here. And we saw a small move up to POC. We rejected the POC. So what does that mean, guys? That means a move down to value area low. Well, the value area low was at 184. So I was looking for an SFP of 184. And remember, I said no SFP equals no long. If you don't pierce below it and start to reclaim it, there's no long position there. So you can see we dumped through it harshly, and we're sure we might be bouncing from a local support, probably some sort of naked daily point of control or some order block on lower time frames. But now that we're losing the value area low of our range, we might see a move to back test the value area low, which is also going to be where your VWAP is. And then we might continue down. And if we continue down, I would expect to take out your lows at 172.5 or 172.1. And we do have, like I said yesterday, we could see an SFP of this low into your 171 golden pocket. So what I'll do right now for the weekend is we can set an alert on that 172.1K low. If we SFP that, I would potentially look for a long position off of that. But a little bit lower, your naked daily point of control at 169 is still in your support zone. So really we have a support zone between 172 and 169. If we lose 169, we're going to see a harsh dump to the downside because there's really nothing in here. I would say we're going to dump to 150. We do have our one-to-one correction at 150. Now, that's not as important now because of this range in here. But yeah, pretty much if we dump, remember this entire move, let me go ahead and get rid of this and this. And I know this chart's messy, guys, so please excuse that. I don't keep a object tree on this because I only keep an object tree on the main coins I actually trade. But we have an impulse in here, a wave one, a running flat and a wave two, your wave three, you had a very quick wave four to backtest your previous range value area low. After backtesting that, I long that, by the way, you can see the green box there. I long that. I took profit exactly at 308. So 5-wave move. Yes, it does look, your wave 2 is way longer than your wave 4, but there is a rule of alternation sometimes in Elliott waves. And now if we're seeing a corrective move down after an impulse finishes, this is all considered an impulse here. After an impulse finishes, you're looking for a move down towards your golden pocket, your macro golden pocket. Well, you can see that macro golden pocket pulled from the low of the impulse to the high of the impulse is coming in around 138 to 132. Okay. It's also going to be your previous range point of control. You can see that point of control right in here. It's your previous range point of control. That could be where we're moving down to, is in that general area. Now, let me check here on the weekly time frame. Okay, we have a weekly a little bit below it. We do have a weekly at 150. You can see right here at 150 where that naked daily point of control is. I'll mark that out as well. We have a weekly level. And that's your weekly order block as well, this weekly order block in here. Now, one thing to say about this order block, guys, with order blocks, the important thing to understand with order blocks is when you have, and what an order block is when you have a green candle or a few green candles, and then you have one red candle, and then you have continuation of green. That one red candle and squeezed in between the greens becomes an important zone of support. This weekly order block, if an order block is followed by a volume imbalance candle where it creates a fair value gap, that makes this order block even more important. So this weekly order block between 156 and 150 is a super important order block. But knowing that we have a naked daily point of control at the bottom of the order block where our weekly level is, that now makes 150 a very important support level. So 150 would be an area where I would be looking for a potential bounce, even if it's going to be a bounce to make a lower high. We also have a daily, actually, no, we don't. Sorry, that daily's been tapped. We do have a daily level, though, before that. Now, this daily level is not very significant right now. It's at 160. You can see that daily order block right there. So green, green, red, green, 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 right? So that red order block right there, it doesn't have an imbalance though, because this wicks up, so there's no imbalance here. There's no fair value gap afterwards. So it's not as strong as the weekly one that I just showed you. But what we could probably expect to see if we're going to crash down and we're not going to hold this local green box of support, we might see something like a crash down to the daily, a bounce, and then a back test of the value area low or the lows of the range, and then continuation down, you know, and maybe we get a decent long position from 150. And you even might get a decent scalp from the daily at 160. Let's see if we have any points of controls in here. This is for this month, so we're not going to mark that out. It's not closed yet. The month still has a few days left, a week left. No weeklies, no naked weekly points of controls until we get down to 120. That is not a good sign. That's the value area low of your previous range. We don't want to get down that far, honestly. And then we'll look, I have to zoom in a little bit, and we'll go to our naked daily points of controls. All right, we're not going to have, just pretty much the one at 150 that I had marked out there. So that's that. So yeah, if we lose 169, I believe we'll come down to 150 to 150.8 or so. We have a 1-to-1 trend-based Fibonacci extinction in there. And also you can see the 1.236 is going to be inside your larger golden pocket. So it's not looking the best for near. The fact that we rejected this value, this point of control, and we're losing the value area low, it's not a good sign. If we can get back up inside of it, it looks good. But honestly, what right now, if I go to the 12-minute time frame, this looks like a triangle forming in here, a 12-minute symmetrical triangle. Remember, symmetrical triangles are continuation consolidation patterns. That means you're going to continue your local trend, and you might see a breakout, a fake breakout to grab liquidity at the top of the triangle, but generally it's a continuation consolidation trend. So you're likely to, you know, either one of two things on the 12-minute here. On the 12-minute, you're either going to break this up to grab liquidity, and you'll probably grab it to hit the value area low and then continue, or you're just going to continue straight away. But these are continuation consolidation patterns in here. A, B, C, D, E. You're going to see that dump. Okay, let's go to hype. Where did you go? There we go. Daily. Hype is trying to hold on to the value area low of our larger range. Remember yesterday, I explained this yesterday. We had this smaller upper range in here that was forming. We lost the value area low last week. We back tested it. We rejected. So now we're coming down. and we're at the value area low of this bigger range. So what I can do for now is we can get rid of this smaller range until we get back inside of it. And we're pretty much at this value area low. There's a couple things we could see from here, right? We could see the 1, 2, or ABC where you bounce between the 1-to-1 and the 1.236. And personally, I would be looking a lot closer to that 1.236, around 52.5 to 51.5. That's the main support zone below us. If you do not, or in a very bearish scenario, we're looking at kind of something like a 1, 2, a big 3 that's going to push you down, and then probably 4 or 5 continuing into this prior range. So we can pull the volume profile of this prior range. Yeah, and you have your value area high at 44, your POC around 41. And then even your value area low. I like that value area low because you have liquidity into it. Let's look at our points of control real quick. No naked monthlies until we get way down at 27. We don't care about that right now. Naked weeklies. All right, we do have a naked weekly point of control right on top of your value area high of your previous range. So that's something you're going to want to mark out. For sure. You're going to want to mark that out. That's a naked weekly point of control at 44. And let me turn this off real quick. You can see that's right on top of your previous range value area high. And remember what I just described to you guys about market auction theory. We had a previous zone of balance on hype. You broke that. You saw expansion to the upside. We now have a current range that it's still trading within the current range. It's a new fair value for Hyperliquid, a new price discovery fair value for Hyperliquid. But if we break this range to the downside, first off, if you lose the value area low, you have a very high chance of grabbing the range low liquidity, right? And that's at 52.5. Now, either you grab the range low, you get back up inside the range, and then maybe you could see new highs. But if you lose the value area low, you grab the liquidity, and then you reject on the bearish backtest of the value area low, that's when you're going to continue down into your previous zone of balance, which is the previous range, right? You can see there's not a lot in here to keep us from dropping aggressively down to 44. So we really want 52.5 to hold. If we make it down there, we could still chop around the value area low and end up holding it because we're going into the weekend. But it's not looking the strongest because we've already had 1, 2, 3 days of trying to hold it, and it's not really holding, or it's holding on by a thread, I should say. So if we start to lose and close our daily candle today below our value area low, I would expect to move down to 52.5. It might take a week, but we're probably going to come down there. If we don't SFP, another theory is that like the impulse, right? 1, 2, and this third wave is going to bring us all the way down, maybe even to 44, to back test 44. We're probably going to see a bounce in a wave 4. Your wave 4 could back test this prior zone of support, and then you could see a wave 5, something like that. So 44 is going to be the next big level. If we lose 52.5, 44 is going to be the next big level. Let me just check on the weekly time frame. All right, no weeklies in there, no weeklies. Okay. What about our monthlies? Nothing really. Okay. I'm going to set an alert on 44. So this is going to be... And I already have an alert on the SFP of 52. But right now, I have to say, it's not looking very strong. Hype is at the value area low, and technically, we are sustaining and maintaining support, even though we're starting to, like, it's like a piece of paper, guys. Like I said, poke a hole, gets weaker. Poke a hole, gets weaker. If we keep poking holes in here and ranging, eventually this thing's going to break down. If we keep ranging without seeing a bullish break in market structure. So we need to break these double highs. That's our key for a good sign of strength on hype is we need to break the highs at 60.06. Now, could we be seeing accumulation in here, right? Like just through like a very mini accumulation, a tap one here, a tap 2 here. If we come down and we hold in here, tap 3, what you would want to see is a break of those highs, maybe a retracement to backtest the value area high of that range, and then you would look to continue up, and I would look to take out those highs up there. So we can look at our volume profile of this small hourly range, just this last day or so. 3 days, I think it was. Okay, we're coming down to the value area low. I would probably want to grab this internal liquidity right here at 57.95, because look at right now, this looks like a corrective move to make a lower high, and we're starting to dump. But the bullish case scenario is that this is a tap 1, this is a tap 2, and if we come down, hold the value area low again, you want to break out of the value area high and take that double top. We have a double top at 60.06, pretty much a double top right there, right? So you kind of want to break above those highs, and that would give you your first big sign of strength for Hyperliquid. What I'll do is I'm going to set an alert on that 60.06 highs, and if we do that during the weekend and I'm available, I will let you know. Let's see here. Let's just do this. I will let you guys know that at least we're seeing some sign of strength on Hyperliquid. That doesn't mean we necessarily take action on a trade, but it's showing you a sign of strength. We can pull our local golden pocket, 786. We go from the lows to the highs here. Okay, golden pocket. Now, this is a new golden pocket because remember, it's from this high, from today. We have a new golden pocket at the value area low, and we even have some liquidity from this morning resting into it. So right around 57.9 to 57.8, it's our local support level. Local, very local support level there. Okay. So I'll set an alert on this. If we get an SFP of that, we can look for a long. But I would take that long with a bias, because if you take out this low, it pretty much confirms that this was a 3-wave corrective move. So what that tells me is that you're likely to take out the lows of that corrective move, the origin of that corrective move. Yeah, and then honestly, other than that, if we start to make new lows, I would be waiting until we get that move down, a big breakdown to 52.5-ish. All right, let me scroll up in the chat. Let's see here. What else do we have here? We did near hype. I thought there was another coin we were going to look at. Say. It was Say. So you said Say saw an SFP? Oh, yeah. Okay. I think I see what you're saying here. Saying with Say. Let me hide this. Man, Say is just not looking good. So first off, we broke our macro pitchfork to the downside. You can see this bearish pitchfork. Bounce from the bottom, reject from the upper band, lose the midline, reject from the midline, come down to the band. Another 3-wave corrective move. Look at this perfect 1, 2, 3-wave corrective move. Reject, continue, start to lose and then we lose the pitchfork, right? Once we lose the pitchfork, we tried to get back inside of it here. We failed. So now we're forming kind of a bottoming range. I would say we are starting to form a bottoming range, especially in this zone. We're starting to form a bottoming range, but we're not seeing any sign of strength. Like, God, this is so crazy for Say. Ever since really, what is that? July of last year, a harsh downtrend from July of last year. Very harsh downtrend. And until we see a macro sign of strength on this thing, Say might continue. Money flow still bleeding daily on the daily. No bull divs. Money flow still bleeding. No bull divs. I mean, Say looks, for all accounts, that it's going lower. And yeah, we're at the lows from a couple weeks ago. What I did like about Say, but now it's invalidated it because we took out those lows. There was a possibility for an impulse here. Look at wave 1, wave 2, wave 3. You kind of have this flat here in a wave 4, and then you had a wave 5. So that was potentially a 5-wave move, but you did reject, still creating a lower high, right? We'll put that on our log scale golden pocket. You still did reject from right around your golden pocket. Man, this is just not looking good here for, say, the way it looks. Not looking good at all. I would pull the range, the volume profile here, and you are losing the value area low. For the first time today, if we close the daily candle below the value area low, actually, we closed it yesterday below the value area low, and we're seeing continuation today. Yesterday, or is it today, we're attempting to see an SFP of those lows, and it's not giving us the best reaction right now, at least not right now. Yeah, because look at that's 8 hours now. 1 4-hour candle, 2 4-hour candle. You're attempting to see an SFP of the lows. Do we have bull divs here? No bull divs on the 4-hour. We did have some bull divs on the 4-hour on NAMI, but now they've been invalidated with this momentum wave, and money flows draining out. Money flows draining out. It's not, yes, it isn't. It's a higher time frame SFP, but it's not looking good. Let's just say that. It's not looking like it wants to pass the test. And yeah, look at this. 1, 2, 3, 4, 5, 6, 7, 8, 9 hours now of trying to hold that previous low. There is still a chance of seeing a move up from here, but the move up I would expect at the very least, if you even get a move up, watch for a back test of the value area low and then continuation. It sucks. The way this looks, it sucks, guys. Say is not looking the best. And even on the 1 hour from this super harsh channel, we have a kind of a channel here. Let's bring it to this guy. Kind of this channel with a bit of a fake out in here. Let me actually redo this. We'll bring it to... They're about the same respected. But yeah, either way, you need to start breaking this downtrend. You need to at least break out of that thing. And I don't know if other coins have more price history. Let's see here. Jesus. No, dude, this thing is just dying off like crazy. I hate to say this, see this with say. Look at that short was a nice short right there. We had the box. It just took longer than I thought. This volume profile is still relevant, and it can go to right before the dump in October. Yeah, I mean... Guys, this just doesn't look good here. What we actually can do is pull. Let me just get rid of these now because obviously these are no longer relevant. We can pull a pitchfork, a bearish pitchfork. Jeez, look at that, guys. That is wild. And on the weekly time frame, well, that wick kind of throws about like, look at this. Looks like a 1-2, 1-2, 1-2, 3. Now, are we going to see 4 5s coming? Are we just going to see this thing bleed out to 0 pretty much? I thought Say was a good project, but clearly... And because this is a harsh trend to the downside, you want to use an original pitchfork. Okay, it's not that steep. Let's see what our modified looks like. Our modified skip one. Even so, but this is highly respected. Look at bounce from the bottom, reject from the midline, bounce from the lower band, reject from the upper band, bounce. Yeah, so this is the pitchfork to use. The more it's been respected in the past, the more likely it is to be respected in the future. As long as you're below this pitchfork, you're going to probably see continuation down. Honestly, guys, I don't know where this is going to end. And really, on the weekly time frame, yes, you do have potential for bull divs, not confirmed yet. You have potential for bull divs here, but it does not look that good right now. And I would wait for a sign of strength before I even start to buy this spot, because this could just keep bleeding and bleeding and bleeding and bleeding. You have to wait for some sort of sign of strength in order to buy this, or even in order to long this, in my opinion. Not financial advice, right? Not a financial advisor. And yeah, I would just be playing the smaller range, and you're below the value area low. You could even play a range of like the original one I had on there, where it's from that low, or even really all the price action below the pitchfork, right? Either way, you're not doing well here. Rejected value area high, lost. Man, the one thing that kind of faked a lot of people out was this being a potential impulse. Wave 1, wave 2, wave 3, reclaim, backtest, reclaim, backtest, reclaim, backtest, 5, right? 1, 2, 3, 4, 5. But because now we have officially taken out the lows, it cannot, it's irrelevant, I should say. First order of business is breaking this very, very steep downtrend in here. When this breaks, it's probably going to get a nice move because of this steep liquidity trail. But right now, we're not really seeing proper confirmation for an SFP long. It sucks. We're not. And even locally, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. I mean, are we just going to keep doing that, you know? So there's nothing in here that tells me to take a long, unfortunately. Man, Bitcoin's holding on by a thread. Not looking the best, not looking the strongest. And guys, if Bitcoin decides to nuke to the downside, all coins are going to get so freaking wrecked. Let's look at total market cap. Total market cap, again, is front running that pitchfork midline. I really thought we were going to come up to that pitchfork midline and grab that liquidity, but we're not. We're not seeing it. So far, we're still not quite breaking. I mean, we still had the same sort of parabolic curve on liquidity here that we did on Bitcoin, and you're breaking your first daily low. You know, that liquidity grab of the daily on the daily time frame. Unfortunately, if we reject and we start to break down and sweep all of this, you're likely to take out your lows in here, and you're likely probably to come down to your pitchfork band. That's going to be a harsh move to the downside. Another thing here is on the total market cap, you have a double bottom here, and that's not good to see, because it's pretty much twice the liquidity now down there. Bitcoin made a lower low on this move. Let's look at USDT dominance chart. Yeah, what did I tell you guys? I told you on Monday or Tuesday's live stream when we looked at this, and I forget, I think one of you guys pointed out to me in the chat that look at SFP of the lows at the back test of our value area high. Guys, we also have the liquidity trail here. This could break up aggressively to sweep all that. And if we break up aggressively to sweep all that, sure, we might see some sort of rejection, golden pocket 786, but it's likely that we come up and finally take out those 9.5% double top highs from our last bear market. Let's pull this is a small range that we've got up here. So we are still inside the volume profile. We're at the POC. Let's hope Bitcoin's at its support POC. USDT dominance is at its resistance POC. What we want to see here is this, and a drop back inside this volume profile. And that means Bitcoin would be seeing something like break out of this range. But it doesn't look like that's the case, guys. It looks like we're going to continue up here on USDT dominance. And it also looks like Bitcoin's going to see that big break to the downside. I would like to pull our golden pocket. Yeah, golden pocket is going to be coming in. Let's make sure that's not on log scale. Let's look at our, naked weeklies. You're going to have a naked daily right around your 786. You also have that daily level that's up there. So your big zone of resistance for some sort of rejection. But if you get up that high, like you're probably going to do something like this, sweep all of this, small rejection from POC to back test value area high, and then continue up. Then from here, you might see a bigger rejection, move down to POC, and then you would come take those highs. All right, let me check the chat here. Where was I? Okay. Yep, we did Hyperliquid. Okay. NVIDIA. Yeah, we can check out NVIDIA. All right. I think this monthly is old. Let me just double check this. I know it's, well, first of all, it's been ran through quite a bit, but yeah, that's way old. So let's get rid of that monthly. Well, NVIDIA, this is on the weekly time frame. Okay, we saw that resistance rejection here. We saw a nice pullback to grab liquidity of the lows of the range from our golden pocket value area high. And then now what we have on the weekly time frame is a new range that's forming. You can see this was your prior zone of balance. Okay, you break out of it, you see expansion to the upside. Now we are forming a new zone of balance. So we can take the volume profile and look at that zone. All right, this is somewhat nice for NVIDIA. On the weekly time frame, you broke out. Here, let me get this higher screen for you. You can see we broke out of the value area high, immediately back tested it. Once you back tested and it held, you made new highs. In this case, new all-time highs, right? Now we're coming in for the higher time frame back test. If it back tests and it holds, you would expect to take out these highs at 236.5. It's also around your pitchfork midline, and you can see the midline kind of held in here. The midline's trying to hold in here. So we could see another move up on NVIDIA. Let's go to the daily time frame. The one thing that we have to be careful for on NVIDIA is there is a contracting diagonal in here. 1, 2, 3, 4, 5. Okay. Now, what we can do to see if this is a valid contracting diagonal is you pull a channel from the highs to your lower highs down, bring it down to that low, and you can see your wave 4 did not hit the top of the channel. So this is now a valid contracting diagonal in here, right? It's contracting. So you have a 5-wave move, and because there's overlap, there's a 5-wave move down 1, 2, 3, 4, 5. There's overlap between the lows of 2 and the highs of 4. You can't count it as a traditional impulse, but it still could be considered a motive wave to the downside because it's contracting diagonal. That's the only thing you could say. Now, in a contracting diagonal, generally you do retrace pretty deep within that contracting diagonal. So usually to the golden pocket 786 zone, sometimes even to the 886. So above us, if it's a bearish scenario, you're looking to reject from either one of these two levels or maybe even the 886, right? But let's pull, and what now we can look at on the daily time frame is pulling a smaller volume profile of all the price action after we broke out of the value area high. Okay, that's this volume profile here. We're coming up near the value area high, and we did just SFP 3 days ago some local liquidity. You can see we finally grabbed the local double top. High here, equal high here. We grabbed on Wednesday. We grabbed that liquidity, and now we're losing the POC. So we could be seeing a move down. Actually, this could be some sort of flat 3-wave move, or actually you could maybe even say a 1, 2, 3, 4, 5. This could be an A, B flat because you took out the highs of A, and then you would look for a C flat to take out these lows. So you would be looking for a move down at least to take out 197.97, probably to come to your value area low at 195.75. And you could still see this as an A. The flat comes down for a B, and then your C wave comes up here. And this is part of a bigger ABC, right? Where you have your contracting diagonal in an A, your B wave, and then you could see another C wave. Or in the very, very bearish case scenario, this is not an ABC, but rather starting a weekly impulse to the downside. A wave 1, a wave 2, 3, 4, something like that, right? Where you start to see NVIDIA dump. Now, I would say NVIDIA fundamentally is pretty strong, but let's see. How do we look on the weekly? No bear divs there, but let's go. Or this is the daily. Let's go to the weekly. Let me just get rid of this first. Man, yeah. You have multiple drives of weekly bear div. Okay? High, higher high, higher high, higher high. 5 higher highs on the weekly. Lower high, lower high, lower high. That actually is equal highs, but that's still fine. And then you have another drive of bear div here, and then now another new drive of bear div. Money flow draining out all the way from May of 2024, continuing to drain out on the weekly. I would say this thing is in danger of rolling over. Like multiple drives of weekly bear div here. Now, NAMI is much quicker. NAMI had the bear div form on the weekly in here, which gave us this pullback in this range to grab liquidity. So after that liquidity grab, the market kind of resets. So we want to look at bear divs between really the last 2 major weekly highs, between this high and this high. Let's see. Do we have bear divs on NAMI? Well, we did have some bear divs, and they played out with just a sideways range for a few like a month. And now you do have bear divs between this high and this high. If you look here, that's these highs in here. Actually, let's see here. No, okay, never mind. I would say it's an equal high between these two momentum waves. So Market Cipher is showing real warning signs of a major pullback, maybe even to $90 or lower. Maybe actually now you would have to say down to this low, 86. I would just be concerned on NVIDIA. Technically, the bear divs are insane on the weekly time frame. But that doesn't mean we can't move up locally a couple more times, maybe coming up. And I guess that's not the all-time high, is that? Oh, it's got to be. What is that daily from? I have no idea what's going on there. You're still in your hyper bullish pitchfork structure. Rejection, you can see the first time we hit it, rejection from the top, a multi-month sideways range to grab liquidity. So what I see a lot in this, and I can show you this on Bitcoin actually, we hit the top in 2025 for Bitcoin, and this is 2024 for NVIDIA, but you drop, and then the next time you come up, you reject from the the upper band, not the top again, but the upper band, reject from the upper band. And Bitcoin did that. If I go to Bitcoin and I show you guys, not this pitchfork, it's our, where are we? Macrostone. Hit the top, drop to the lower band, and then you rejected from the upper band. You didn't make it to the top again. So you see that kind of pattern a lot. You hit the top of it, you see the drop, then you only come up to the upper band next time, and then you finally break it down. So NVIDIA could be close to topping out here, guys. I'd just be careful with NVIDIA. Can you check out the Bitcoin bull? John, I'm not sure what you mean by that. Will you give me some clarity on that? Is that a coin, Bitcoin bull? Bull? Maybe this Bitcoin bull volume? Yeah, you'll have to give me some more insight on what you mean by that, because I'm not familiar with that. ETH, yeah, we can check ETH. And Peoria Boot, welcome in. Peoria B, welcome in. All right, ETH, man. ETH got the SFP of the highs. Your bullish scenario you want to see on ETH, but remember, guys, I told you this on Tuesday's live stream. Our initial move up was a 3-wave move up, highly likely to be classified as a 3-wave corrective move. Because of that, we have to be aware of taking out the lows. Have to, right? On the daily, on the larger time frames. That doesn't mean we're going to drop straight down there. But because of that 3-wave corrective move to start, and because we did not take out the low like Bitcoin did, it is highly likely that we are going to see a move down. Now, remember, we looked at this being some sort of flat. A, B, C, and we are in our targets for the C wave, our flat targets. Between the 1.236 and the 382, excuse me. We're rejecting from that area. It's also your previous range value area low. So we're starting to backtest it. Remember, we have zones of balance. This was our previous zone of balance for Ethereum. We dropped it, we lost it to the downside, and now we're creating a new zone of balance. So what we've been seeing over the past week is we're trying to break out of the zone of balance, the value area high of this range, and we're breaking out of the value area high for the past week or so, and we're trying to make it back inside our previous zone of balance. So if we reject here in this general vicinity of the back test, you're expecting to make new lows below, or you're at least expecting to come towards the value area low of the range, right? So unfortunately, we're rejecting. You're not going to see dire flashing warning signs until you re-enter the value area high. So Ethereum is still quite a ways above its value area high, whereas Bitcoin has already dropped back inside the volume profile and has hit its point of control. So Ethereum actually does look in some ways stronger locally than Bitcoin, but this major flashing warning sign, red flag, stop sign, whatever you want to call it, be careful, because that is considered highly likely a 3-wave move. We have to be careful here. And if we're looking at that, A, B, C flat after the C wave ends, you're expecting an impulse down to take out the lows. Now, are we done with this move here? Because look at, you have a 1, 2, 3, 4, 5 to finish your C wave. Your C wave's an impulse. Or actually, we can't call that a C wave because this is a 3-wave move here. So that has to be a W. You also have a 3-wave move here for an X. So you would have to be looking at some sort of 3-wave move here. Maybe that's the running flat in here. And then your push up for a Y. Or you could say the Y wave is an ABC, right? With a contracting diagonal in here for your C wave. Either way, you're looking for a larger WXY and then down. Okay, Hype is hitting something. What is that? Oh, Hype is coming into our local support. Sorry, guys. I know that's annoying. All right. We are... I don't know why TradingView does that. We're coming into our golden pocket Personally, I would like to see us grab that low at 57.88. What is that? Okay, let me go to the hourly, because on the hourly, look at that's so weird how that does that. On the hourly, we're SFPing it, but if you go down to the 15-minute, it's not SFPing it. All right, shut up. Bear divs are playing out, guys. And now that we've taken that low, it is more likely that this is a confirmed 3-wave corrective move. Now that we're taking out this higher low here, liquidity. You had bear divs on the chart. Hidden bear div printed as well. Not looking quite the best here for hype. If you are going to bounce, like this level right here would be a scalp opportunity for me. So if you wanted to long, as soon as you reclaim the 618, you could look for long. Your stop would go below that low. And then at the very first TP, I would target the VWAP. That's still almost a 7-to-1 risk to reward trade on just a move up to VWAP. If you're going to get in once you reclaim 618, right? You wait for the reclaim of the 618 first. But I would only take that if we have bull divs on like the 15-minute and under. Let's see. Do we have bull divs? No, we don't. So right now, I would not take this trade, even though you're at support, because we needed bull divs between this low, and this low. 15-minute, you did have bull divs, but then you invalidated it with this big momentum wave down. Market Cipher doesn't have bull divs. Let's go to the 5-minute. All right, actually, you do have some nice bull divs on the 5, though. You have lower low, lower low, lower low. You have bull divs here, and you have multiple bull divs here. It's up to you guys on whether you would take that or not. Like, now we're starting to reclaim. So right now is when you would enter. Start to reclaim. You're starting to enter. And just coming up to VWAP, I would pull 50% out of VWAP because it's likely you're going to continue down. But it could be a scalp long if you guys do that. You would be using, you have a 0.1% risk. So you could pretty much 10x long your entire account. And if you get stopped out, you're only going to lose 1%. Man, you know what? Maybe we should have freaking taken that. Is Bitcoin trying to push up too? No. Yeah, the thing with this hype, guys, is, like I said, the one scenario that you have is kind of that, even playing this small hourly range, that's what I would be starting at. But you can see how small of a move that scalp that I just laid out is, and it's still a 6-to-1 risk to reward ratio. Just this small little ass move in here could give you a win. But then you're looking for a move up to the value area high of this range or to break your double top of that range. If I had the proper confirmation on the 15-minute, I would have taken this with you guys. But for me, I don't have the proper confirmation. Also, I don't know if I want to babysit this overnight and over the weekend if it's going to see it that way. But guys, yeah, you are getting a reaction. What you want to see now is a close back inside that volume profile. So this small 1 hour range, just going back to, what day is that? To Wednesday. You want to now, yeah, that's exactly what you want to see. You want to start bouncing. You grabbed liquidity. As soon as you left that 618, you could have longed. As soon as you broke above 57.96, you could have longed. And then now you're looking really to come just up to VWAP right now, which is still a, what, 7.67 risk to reward ratio. That's such a good scalp there as far as scalp trading goes. And then you could leave 50% of it open to take out or to come to your value area high, or really to take out those range highs. And look at that. If you take out those range highs, it's a 35-to-1 risk to reward ratio. Now, I don't know if that's going to happen. Honestly, that's very unlikely to me, but with the what we're seeing on the momentum oscillators. Okay, BTC, let's see, what is happening? Not much is happening on BTC, guys. It's just shopping. Yeah, it's just, and quite honestly, this doesn't look good. You know, another kind of 3-wave corrective move. Now, generally, you will take out that high, though. So I wouldn't be surprised, just like with this one, you had that corrective move. I wouldn't be surprised if this kind of goes sideways here for a bit and then comes up to take out that high. But it's just not looking the best. Boomdonk saying good afternoon to you as well. Turbo going lower for sure. Let's see here. Turbo. Man, yeah, Turbo looks like Turbo looks like it's about to take out this low. And look at the wickage, John, on this thing. Super low liquidity. See all these wicks in here? All of these low, high wicks on the daily. Turbo is very dangerous to trade, in my opinion. But the range you want to pay attention to is this range, right? You have a very clear range in here. You're below the value area low. Yesterday was your first daily candle close below the value area low since all the way back at the beginning of June, July, or end of June, you know? So yeah, it's, and then you just keep making lower highs. Look at, you have your high, lower high, you know, and then continuation. So to me, it's very, very likely that you're going to take out that low. Let's also see if you've hit in the 886, because remember, in a strong downtrend, if you pull from the low to the high and you've hit in the 886, which yes, now we have hit, that's where kind of where we're bouncing or trying to bounce, the 886, even if you see a bounce from this 886, you're more likely now to take out that overall low. So you could see something like this where you come up, back test value area low, and then come down, but it's very likely that you'd continue down on Turbo. And look at the money flow on this thing on the daily. Horrible looking. Money flow in the red. You've invalidated the bull divs now. Look at, you had nice drives of bull divs forming. You're now invalidating them. Let's go to the weekly. Yeah, I mean, invalidating. Look at your weekly momentum wave starting to blow out here. Money flow starting to blow out here. Money flow on NAMI starting to blow out. You're invalidating, or not quite yet, you haven't, but you're very close to invalidating your weekly bull divs. And you had such nice, look at this. Now, when this does start to roll over, it's going to roll over nice, but look at 1, 2, 3, you know, 3 drives of weekly bull div. But if this doesn't form another drive, it's going to invalidate all of this prior stuff. So, you know, looking for a move at least down to that 1.236. And unfortunately, like, just this is dumping extraordinaire, right? What I would potentially consider here is, you know, I don't like to pull a pitchfork from the listing price. So you could pull a pitchfork. Man, that high is higher, though. Let me just see how this works. And then we would have to make it an original. Oops. Yeah. I mean, it was very nicely respected while it was inside of it. So you attempted to break out, you back tested it, and you're going sideways, but you're not really. So you can see here after somewhat of some nice respection on here on this pitchfork. Yeah, that's not going to work. You might drop all the way to actually hit the bottom of the pitchfork, 0005-ish in that area. But it's definitely looking bad. And like, honestly, John, just pay attention to this little range until you start to break it. So it's very likely now that you're closing yesterday's daily candle below the value area low that you're going to take out the range low. And if you don't SFP the range low, you're probably going to come to this 1.236 at 000693. There's a downward wedge, and often it sneaks out of the bottom, then back in and moon. Crypto Creek, which are you talking about on Bitcoin? Would you mind checking Allo USDT? So we can check that for sure. Okay, Allo USDT could be wicked. Could be a wicked scam punk, but I appreciate you, my man. At least on Binance, USDT on the daily, are you talking about a low time frame scam pump? Well, I can see right now you're just taking out liquidity from a local high. Okay, so if you close the daily candle below 53.20, that's sort of a bad sign. And honestly, look at this. Looks like a 3-wave corrective move, right? On the daily time frame. You have a 3-wave corrective move. You made a higher low. So now we would be looking for another 3-wave corrective move, but you would want to take out that high or at least come to the 0.9, which we have done. But because this first move down was a 3-wave corrective move, what we're either looking for is this, corrective move done, and you're looking for an impulse here, 1, 2, and this 3 to continue, and then 4, 5, or you're looking for a larger sideways range, a W, X, Y, and then continuation to the upside. But because this started with a 3-wave corrective move, even if it's a longer range, you would be eventually looking for more upside. And if you pull your volume profile or your Fibonacci retracement from the high of that corrective move to the low, if you hit the 0.9 fib, it's the minimum target for a flat. I'm just going to make that a different color. And you've hit the 0.9 fib. So you technically have your flat target. Now, the way you would do that with this is a very clear zigzag correction, right? But in here, you would have to say this is some sort of A, and then you have some flat in here for a B, and then this would be a C up. And the ABC makes the X wave. So you would want to not, you technically could roll over from this SFP and come all the way back down to take out that low. But let's actually now that we have that kind of more macro perspective, let's zoom in on the 4-hour. And let's just take that volume profile, right? From the sideways corrective move here. Okay, so you got back inside your volume profile. That's when you saw kind of this flat coming in here. Let's see, this could be, 1, 2, 3, 4, 5. You have your kind of 5-wave contracting diagonal with an extended 1 in here. Then you would have to say this is like an A, B, C, and then 1, 2. All of this is a 3, obviously. 4, and then you would look for one more move up to take out that high. So watch for the SFP of 5593. And if you get that, you might see a move all the way back down to 2236 or lower, a little bit lower than 2236. But as far as your volume profile goes, look at, you're finally breaking out of the value area high after seeing the SFP we just had. After seeing the SFP here, you back test the value area high and you're holding the back test right now. So that means you're likely to take out this local high here. Our more local bearish scenario is you would reject from our golden pocket and then fall back inside the range. Golden pocket 786 zone. And that's exactly where you're at right now. But if you take out this 52, what is this? 5283, then it's makes it much more probable that this was a confirmed three-wave corrective move, and you're likely to take out that high and most likely that high. To me, it does look like this is a three-wave corrective move in here. Once again, the bearish scenario is that you're going to reject right now from this golden pocket, and this is going to be a 1, 2, 1, 2, and then you're going to see that big breakdown, and then you're probably going to see some 4 or 5s come in here. Eight-hour money flow looks pretty good still. You have very slight bear divs. Market Cipher has kind of these wonky bear divs of one momentum wave that is starting to be wonky looking. Yeah, I mean, this actually doesn't look too bad. Money flow is still curving up. Money flow is still curving up on the daily. So I think you're probably likely to come take that high at 55.93. I have no idea what this is, but yeah, no bear divs on the 15-minute either. Money flow looks pretty decent here. So you're at a local golden pocket resistance, but it looks like this wants to continue up. And if it breaks that high, once again at 52.83, then you're far more likely to take out the highs here and really 55.93. Okay. Eric, you shorted that SFP? Awesome. With the stocks that may not have as much leverage as BTC or crypto, likely NVIDIA, do you think the liquidity grabs and volume profiles? Yes, Caesar Coco, liquidity grabs and volume profiles absolutely still apply to traditional markets. They work. I mean, we got to remember liquidity grabs are based off of the huge, it's technical trading, right? So when someone sets a short, like for instance, whether it's NVIDIA or this random altcoin, it's based off technical trading. So say you shorted this lower high golden pocket right here, right? Because if we pull a golden pocket, look at, you're rejecting your golden pocket, right? So you got your initial move down. You broke local market structure bearishly by taking out all these internal lows in here. So now you're looking for a lower high to short, okay? You come down, you get the short, your stop, technical stop would be above that high. Oop. Technical stop would be above that high, and then you would be targeting new lows, right? In this case, it would be the back test of the value area high. That's pretty much a 3-to-1 risk to reward ratio. Now, all the people that shorted here, their stop is going to go above either this local high here or above that high. And that's no matter what asset it is. That's the way trading works. That's the way technical trading works. So yes, liquidity grabs still do work. And actually, on the higher liquidity assets, it's even more so than lower liquidity, because lower liquidity has such small liquidity, one order can kind of mess up that liquidity grab. But on huge multi-million-dollar or multi-billion-dollar liquidity assets like NVIDIA, for sure it does matter. And volume levels are the most because that's where the most traders are involved. So they will defend positions and stuff like that. So, yep. Okay, let's see here. Yeah, and NVIDIA has the most leverage. Okay. But yeah, even without leverage, man, it still matters. Andy Big Man, welcome in. How about Sol? Okay, let's check Solana. Oh man, Solana is dumping. Well, remember yesterday, guys, I told you that we were moving down. We found reacceptance back inside the volume profile, backtest reject, backtest reject, backtest reject. And I said that we're likely to break this down and come to around 69, 69, 68. And the reason why is this sideways volume profile in here. We were starting to lose the value area low of it yesterday. And you can see our candle, our daily candle did close slightly below the value area low yesterday. So that means we're likely to continue down to take out your range lows. Now, could we see an SFP of the range lows? So let's zoom in now to the 4 hour. Could we see an SFP of this low and then back test the value area low before continuing down to 69? Yes. What I will do is I will set an alert on that low. If we SFP that, I would consider a long, but I would only consider a long. This will be my entire long trade. SFP that, stop would go be wherever the wick ended. My entire take profit would be right there at the value area low. And then I would look to flip heavily short on that back test of the value area low to bring down to 69. That's the two trades I would be looking at on Solana. You only take the long trade if you get the SFP, and that might happen right now. We might get this live. But look at this, guys. We had this prior range, right? We dropped inside, rejection from value area high, rejection from value area high, rejection. But each one was slightly a lower high, slightly a lower high. So market structure was still bearish. Lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. Now you can expect another lower low. And eventually this sideways range is likely to break down. Yeah. Well, we have the alert set. Let's see if we get that. But it doesn't. Let's see. Money flow looks heavily bearish on the 4 hour. 2 hour. No bull divs. No bull divs locally. 1 hour. Yeah, money flow leaving aggressively. Money flow leaving aggressively. You do have slight potential for bull divs. Not yet confirmed, but slight potential on NAMI. But honestly, this is not looking good, guys. This doesn't look... I mean, if this SFP plays out, I would be surprised. Yeah, look at this money flow. Oh my gosh, guys. Yeah, not looking good. It's looking like dumping is coming. Man, I warned you guys yesterday about if Bitcoin fell back inside this volume profile, we could see massive dumpage in the next weeks, in the next coming weeks. Altcoins are about to get wrecked. Altcoins are just about to get wrecked. Total 3 market cap. Oh, this is total 2. Let me go to total 3. Ugh. And look at this kind of rising channel that's starting to break down on the hourly. Well, all you need to know on total market cap is look at this. This is total 3, excuse me, excluding Bitcoin and ETH. But look at this first move up. 3-wave corrective move. What does that tell you? It tells you you're likely to come take out this low. It tells you alts are likely to dump. Okay, now that we know that, let's pull our channel. Actually, let me try a different one. We'll go from the lows and bring it up to that high. Yeah, this one's a little bit more respected. So that's kind of our channel that's starting to get exhausted, but we're starting to lose the midline. Now, yes, there's a lot of wickage on total 3 because it's dealing with a lot of low liquidity altcoins and stuff too. Or generally just a lot of different assets, right? We're at the value area low because it's now shifted down just a little bit. This is our big range that we've been in since December of 2024. So almost 2 years now, we've been in this sideways range. And it's not looking good. It's holding on by a thread in here. But you can see we're just not breaking market structure bullishly. And because that first move right here, very, very highly likely, I would say almost guaranteed to be a 3-wave corrective move here. Making a lower high, you expect a lower low. Dang. Keeping that in context, know that the altcoins, it's probably not going to be a fun time for the altcoins in the next few weeks. TBB, okay. Wait, that's not it. TBB USD T. Well, it's only on case X, it looks like. I mean, there's not too much TA can do on this since it's launched. It's gone straight up, but you are starting to see those bear divs potentially come in here. And look at the money flow. Actually, yeah, look at these bear divs that are starting to develop here. What I would look at on this, because you're still seeing just continuation here, you could pull your channel. Yeah, I would pull it to right there. You're starting to see this, you know, you have that initial aggressive move up, and now you're starting to chop a little bit more, but you're still not seeing any bearish market structure break. So I personally wouldn't look to short this until you see a bearish market structure break, because you know with meme coins, these things could just keep going and going and going. But there's honestly not too much I could do here. I mean, you could pull a volume profile of the parallel channel, like of all the volume, all the price action within that parallel channel. But yeah, you look at it, you break out, you back test, you continue up. And we can't even, there's not even really a pitchfork we can pull here because it's such straight up price action and such little TA to do on this thing. So I don't know if this is the one, John, but I just, meme coins are so dangerous to trade too, because this thing could do this like that, right? As soon as the big players sell off, this thing could just rug pull. I honestly don't know what to say about this except for money flows draining out. If you start creating some bear divs, you would definitely be careful here. I mean, 15-minute, you could look at the ranges, right? You had a 15-minute range in here. It was kind of that symmetrical triangle, which is a continuation pattern. You continue up. You have a new range. You break it up. You have a new range. You break it up. Now you have kind of a new range in here. It looks like it's breaking up right now. Look at how I would be very, very careful trading this thing. Even on CaseX, these candles look suspicious. Low volume. But yeah, you would just be looking at, you know, kind of pulling this sideways range in here. So if you backtest the VWAP and it holds, you might be able to take a long on that, but I would be very, very careful with this thing. Okay, let me get back in the chat here. Where was I? How do you know how specifically where to pull the fixed range volume profile, or like ETH not taking the lows on Coinbase? Is it possible? If it's possible, it took it out on stable charts. I looked at the ETH chart. So look at on ETH, the main chart I follow is Coinbase. Let me get to the daily time frame. I looked at Coinbase. It didn't take out the low, but also if you look at Bybit, it didn't take out the low either. If you look at Binance, trust, you'll have to take my word on that. It didn't take out the low on pretty much every chart. Now, how do you know where to pull the volume profile? So it's kind of in the name. It's called a fixed range volume profile, not a fixed impulse volume profile, not a fixed, trend volume profile. It's called a fixed range. So you look at ranges, sideways ranges, right? So like here, this is part of an impulse to the upside. It ends here, and then you kind of start to form a range in here. Okay, so initially I'd be pulling the volume profile of this range. But then you break it down, you form another local lower range down here. Okay, then you break that up and you come back up into your previous range, right? So now that you have a range here, a range here, a range here, now that you're breaking back into your previous range, like I said, you can use that trick where you take that same volume profile, you combine all three of them, and it gives you your larger range. reject value area high, you know, bounce. Once you lose the value area low, look at this. Once you lose the value area low, oops, I guess I have to keep that back. Once you lose the value area low, you come up, you backtest that previous volume resistance, you dump, right? So it's about finding ranges. Now, there are ways to use a fixed range volume profile in impulses and trends too. It's a more advanced way of using volume profiles, but let's say that you have this pump here, right? You can take the volume profile and you can pull it from the low of the impulse to the high of the impulse. And generally, you will see, if you see a strong pullback, you will generally bounce from the value area high of that impulse. But it's far less common to work. It's a fixed range volume profile, so you're looking at ranges. And ranges are just sideways consolidation price action, right? Yes, you will see wicks below them and wicks above them. But for the most part, you can detect a sideways range by looking at it with your eyes. Oftentimes, you will start to find that range way before, like with this guy here, this last previous range on Ethereum. We knew that it was already forming a range in here. And then it breaks up a little bit. You just keep extending the range, keeps extending the range. And then when you see the impulse down, you see the range is breaking, right? So, and for instance, after this impulse finished right here, huge impulse down, and you start to get a bounce. Once that impulse ends, that's when you can pull your next volume profile. Now, did we know 3 weeks, 4 weeks ago that it was going to be a flat range like this for the next 4 weeks? No, but you knew that it was ending an impulse and seeing a corrective move up. And that's why you can come in and start to pull that range. And then you can just keep extending that range as long as that range is continuing. Actually, you can see here on my charts, after that impulse ended, we saw an initial move up, and then we started ranging in here. So I had a super micro time frame range right here. Now I would have pulled it, you know, looking at that corrective move. This is what it would have looked like at some point. And then once we started breaking back in it, okay, now we have this as a range. Okay, now we started breaking above it. Now it flipped to support. Value area flipped to support. Okay, well, we're going to continue to pull it because it could still act as support. You know, and then you just keep pulling it. And then this is still a bigger sideways range. You just have a little bit of a price action breakout above the range. So I hope that makes sense a little bit. Look at, guys, by the way, Coinbase was having problems with the chart at the time. We came on to Bybit. Look at, we took the short there, 1833. It was the naked daily point of control. We took the short there. Algorand, yeah, we can check. Guys, I do got to go in about 8 minutes, okay? I'll be quick with Algorand. So here, for instance, sideways range right up here, okay? You start breaking it down impulsively. You start to find some consolidation in here. Now you can start saying, okay, now it's momentum's getting lost. We're starting to form a range in here. So for Algorand, simply, I would just be paying attention to this bottoming range in here. And yeah, you're bouncing from the value area low of the range. I don't like how you keep making higher low, just barely. You're making higher lows just barely. You're creating a very massive liquidity trail here. On Algorand, I would be watching for a rejection. If you reject from this POC, you're likely to sweep all of that, right? And here's the thing on Algorand, just like with ETH, just like with a lot of the altcoins, this from the lows, A, B, C, you have now made a confirmed 3-wave corrective move, or not confirmed yet until you take out that higher low, which we haven't done yet. So, but let's say that that's a, you know, the only way to count this bullishly from that low, 1, 2, 1, 2, and then you would expect a 3 in here. But look at how much bigger your primary 1 and your secondary 1 and your secondary 2 are. So it makes it way more unlikely that this is part of a double 1-2 impulse. So just because of this 3-wave corrective move here and this taking so much longer, it far lowers the probabilities that we're going to just blast up here. What's more likely is to come take out this low first and then hopefully see a blast up. right? I mean, you're probably going to do this, come up to POC, then see a blast up, right? You do have a weekly resistance in here. That's also a daily level there. You can also pull on the daily time frame from your last daily high to the low on the daily. Golden pocket's going to be coming in at POC. So your next big resistance right away is going to be this zone right here, right around the POC 00887 to like 0889, you know, that zone. Then you can look at your naked weekly POCs, naked daily POCs. I bet you there's going to be a naked weekly POC on that POC. Oh, no, there's not. Okay, maybe a naked daily, though. Yeah, you also have your naked daily in there. So we have our resistance zone right there, 00887, 00889, you know, just right in that zone. You're hitting a naked daily, by the way, right now. You can see that's why we're finding a little bit of resistance today. And it was also an SFP of that internal high. So you can see we had an internal lower high here. We broke it bullishly by breaking above it. But you had a naked daily there as well. That's why we're finding a little bit of resistance where we're at right now. If you close the daily candle above 086, then you're likely to come up to 0887. But I would be looking for, actually, what I'm going to do right here, because this is nice, I'm going to set an alert here. Short to lows. Sorry, I only have one hand here. It was short to the lows. So we could look for a short from 0887 to take out the low at 0808. Your weekly is around your 786, so that would be another zone to be looking at. Right? And I know they're kind of close together, but I wouldn't be looking for anything in between. So this is one, and this is one, these two here. And I'm looking for shorts from either one of these because this was a confirmed three-wave corrective move up, or highly likely. I shouldn't say confirmed, highly likely three-wave move up here. All right, let's see here. Okay, sideways, no action, no news today, but BTC might pump. BTC might pump. Well, it's not pumping right now, it's dumping. And there is a little bit of news about the Crypto Clarity Act possibly failing the Senate. I think it's down like 51 to 47 or something like that, the votes so far. I was watching some tweets from Watcher Guru. This might be the start of the bottom. Stocks are correcting also. Oil pumping. Yeah, and also the war, the geopolitical conflicts. I don't want to use that word because then you get shadow banned. Geopolitical conflicts going on right now. It's not looking good, guys. I will say this. Right now, False Prophet got back to me. If Wayne Narosi, if you're still in here, the discount code for NAMI for the monthly subscription is Divine25. You can get 25% off that. Now, guys, remember, if you do want to join the Telegram, where I try to keep you updated when I'm not live streaming over the weekends, when I'm not making videos, the Telegram is the way to do it. The Telegram, in order to join the Telegram, you do have to join BYDFI using my affiliate link in the descriptions below. And when you're checking, or use the affiliate link to sign up, and then you have to deposit a minimum deposit of $100 or more into the BYDFI. That's your money. You're not paying it to me. You're not paying it to BYDFI. Once you've done that, you click the Telegram link. And when you're on Telegram Verify channel, you type in /verify in your user ID, and it gets you into the Telegram. Let me check hype for 1 minute here, and then I'll take off. Hype. USD. Yeah, okay, failed SFP. Look at, we're breaking. Remember how I just told you guys this SFP doesn't look good to me? We didn't really have proper confirmations. So we're breaking down here. Obviously, this long wouldn't have played out. That's why I didn't want to take it. I didn't see the proper confirmations. We're likely to, yeah, now that, especially if we close the daily candle under 57.63, you're likely to take out that low. Honestly, hype anyways. Remember, the higher time frames were likely to come down to 52.5 on hype. You might see a small bounce around 55, but it's likely to continue down here, guys. And you're also breaking your bigger range that goes back to really, May 26th, or you could even include this little bit in it. You're trying to break it down here. It could hold. We're going into the weekend. I expect low volume chop, but overall, of this upper range, you're likely to come down and take out the range lows at 52.5. Guys, please do hit the like button if you enjoyed the live stream today, if you learned anything, if you got any sort of insight. Remember, I will try to keep you guys updated on all the alerts that we set on some of these altcoin trades. I will try to keep you updated on Bitcoin throughout the weekend. So join the Telegram if you want, or if you're interested in that. And otherwise, I will see you guys Monday. Thank you all so much. Enjoy your weekend. Trade safe out there. Enjoy your weekends. Get some time away from the screens. And I appreciate all of you guys so much. I appreciate my mods so much. Thank you guys all for being so supportive.